There's an old saying in Tennessee, I know it's in Texas, probably in Tennessee, that says, fool me once, shame on you. You fool me, we can't get fooled again.
Hello, and thank you for watching the Gold Silver News. Today is Sunday, November 20th. Later in this episode, we'll discuss who gets the last laugh and how to prevent getting shamed twice. But right now, let's go to the headline news. This week, we saw the FHA, or the Federal Housing Administration, announce that there's a 50-50 chance that they will need a bailout again next year if the housing market continues to deteriorate, which will most likely happen. And again, that means more money printing. And also, we saw the aides announce that the super committee is likely to fail to go ahead and reach a debt deal agreement. What's new? This happened back again, if you remember, earlier in August. And what happened as a result of that? That's right, the S&P downgraded the U.S. credit rating on August 6th. And in Europe, we have the latest technocrat being added to the cabinet of Italy now that Prime Minister Berlusconi stepped down. And a bit of news that came out that we feel is important here at goldsilver.com is that regulators announced the 29 banks that are critical to global stability. And they're so important to the world's financial system that they require more capital and closer surveillance than rivals, plus a detailed plan to allow them to be wound down without taxpayer help if they hit trouble. Well, how do we know if a bank is in trouble? Well, let's look at two recent examples. We all remember Lehman Brothers, who had a market cap of $60 billion. And if you look at the last 2 years of their existence, their stock kind of went sideways. They got a few offers, but eventually their stock slid, just like MF Global went sideways and slid and went down. And now let's look at the 29 banks that the regulators fear, starting with one of the biggest banks, which is Bank of America. They went sideways and are going down. Next, we have the Bank of New York Mellon with a $25 billion cap, sideways going down. We have Citigroup, who's also going down, trying to recover, but went down. We also have here Goldman Sachs, who's going down. They try to rally, but their stock's going down again. We have JP Morgan Chase with a $134 billion market cap. They've gone sideways, went down, trying to rally, and I bet it's going to go down again. Morgan Stanley, same thing, sideways, went down, rallied, trying to rally. State Street went sideways, went down, trying to go up. I bet it goes down again. We have Wells Fargo, who's been zigzagging, but ultimately on a downward trend. We have the Royal Bank of Scotland, perfect sideways action, and then went down. We have next coming up Lloyd's Banking Group with a $32 million cap, sideways, went down. Same with Barclays, they went sideways, went down. We have HSBC, who went sideways and is going down. We have also Credit Agricole going sideways and going down. We have BNP Paribas going sideways and going down. Bank Popular, no stock, no market cap, but nonetheless, I bet it's the same. It's going down. We also have here coming up is Societe Generale with going sideways and down. We have here also Deutsche Bank that's going sideways, going down, trying to rally, but it's going to go back down. We have Commerce Bank sideways, going down. We also have Unit Group with no stock chart, but again, I'm willing to bet that they're going sideways and going down like the rest of Europe. We have UBS sideways, going down, trying to rally. We have Credit Suisse going sideways, going down, trying to rally. We have Dexia going sideways and taking a big fall. We also have ING Group trying to go up, but ultimately fell and rallying, going back down again. We have also Nordea, no stock chart, but again, I'm willing to go ahead and bank on it going down. Now, the Japanese banks are interesting because if we start off and we look at them, they see that they're going up. You see the two arrows for these three Japanese banks. But remember, they had an earthquake this year and they had to go ahead and do quantitative easing. So that was March 14th. So we're seeing those effects on the stock market. And even the IMF confirmed that the quantitative easing was effective. So let's look at that again. If it wasn't for those quantitative easings, we would see the stock markets or the stocks for all these three Japanese banks going down Look at Bank of China, no QE, Asian market sideways going down, and finally the Spanish bank, Santander, going sideways, going down. And yes, ladies and gentlemen, we all need a prayer, because to go ahead and recapitalize these banks and bring balance, it's over $2.2 trillion to recapitalize the banks. And that's why Mike Maloney says history always repeats, and repeats, but with a little twist each time. So unless you protect yourself, you're going to go ahead and run into the situation where we have this again.
There's an old saying in Tennessee, I know it's in Texas, probably in Tennessee, that says, fool me once, shame on you. If fool me, we can't get fooled again.
We could laugh at that all day long, but the sad thing is that he gets the final laugh. And just like all these other bankers and elitists and politicians, they always get the final laugh, because at the end of the day, the public, we don't do anything. Unfortunately, things don't change. We're always going to be fleeced. There's always going to be something that happens where the public ends up losing. And let's not let this happen. Mike Maloney says history repeats itself with a little twist. Well, we're back right where we were in 2008. But instead of Paulson, we have Geithner, and instead of Bush, we have Obama. Nonetheless, they're all advocating for more money printing, to recapitalize, for quantitative easing. It doesn't matter who's at the helm, the policy stays the same. So we need to protect ourselves until Mike says differently. Go ahead and continue buying gold and silver. Protect yourself, because as the bank's shown, they're all on the brink of collapse or close to of, and it's going to take a lot of money, $2.2 trillion, just to go ahead and save them. And we don't know which needle is going to be the needle that breaks the camel's back, but something's going to trigger it, and we're going to have collapse of the system. And what's going to happen? The system will collapse, and we'll have Helicopter Ben come in and help us and save us by dropping nothing but dollar bills into the financial system, flooding it with paper money. So let's not get fooled again, ladies and gentlemen. We know what's going to happen. We know the script. The banks are on the verge of collapse. We don't know which one it is, but we know what happened with Lehman Brothers. We know what happened to MF Global, and these banks have the similar market cap as Lehman Brothers. If you notice, MF Global's market cap was very small compared to how big Lehman Brothers market cap was. So these 29 banks, we don't know which one it is, or we don't know if it'll be any one of them, but either way, the regulators know that they need to be recapitalized. Somehow it's going to be brought up. There's going to be a major event that's going to trigger it. In the meantime, just go ahead and continue buying gold and silver, and hopefully our insiders appreciate this DVD that we sent out for the holiday gift. Basically, if you bought from us, you got this free DVD, and also you got a discount code for the rest of the year to get free shipping. So just remember, continue doing and supporting us. Watch these videos, let us know you like it, sign up and subscribe to the channel, and buy from us, because Mike Maloney is a generous guy. He gave out these DVDs here for free for those insiders that have bought from us here within the United States. And for our foreigners, we also gave them a discount code that we emailed to them. So there's a lot of benefits to go ahead and do business with us, support us, let us know you like us. Thank you for watching. Have a wonderful day. And again, listen to a great president, and let's not go ahead and fall to the trap.
There's an old saying in Tennessee, I know it's in Texas, probably in Tennessee, that says, fool me once, shame on you. If fool me, we can't get fooled again.